Welcome to the Daily Update. This is Being Prepared Friday, March 18th, where we will look at the action in the market today and then see how things look for Monday, March 21st. And please forgive my voice. I'm kind of battling uh, a lot of congestion right now, a lot of coughing and hacking, and hopefully that won't affect things as I go throughout the video. But we ended up having another positive day on Friday. Apparently the double top, the very short-term double top scenario that I had been at least looking, that didn't play out. And that's okay. If you notice, I've added a new slide near the end of each video, and I'm trying to play different scenarios all the time because there's only three things that can happen. The market can go up from where we're at right now, it can go down, or it can go sideways. And I'm trying to look at all three scenarios at the same time, but then we fall back to our charts to tell us, okay, the probabilities are we're going to go up, or we're going to go down, or we're probably going to continue sideways. But we just want to be prepared. As I mentioned a lot of times in my classes and in these videos, it's the things that catch people off guard that really can influence success from a lack of success. I don't want to say failure, but a lack of success in the stock market. It's things that you didn't see coming. It was the surprises. And if we try as best as possible to acknowledge as much as we can see right now, then that means that we're not caught off guard. When things are happening, it's like, okay, it may not be going in my favor right now, but at least it's not catching me by surprise. I'm not just totally confused. And that's the big difference between having having experience and growing in maturity when you're dealing with the stock market, is to see things before they happen, uh, as opposed to those that are more new to the market and they think, well, I'm just going to buy low and sell high. They get in, it ends up going lower, they lose money, and they're confused and they don't know why. Well, there are clues that we can look at, and that's another reason why I focus on the S&P 500. There are so many clues, there's so much information that we can use as evidence to figure into our decision-making process. So that's why I like the S&P 500, for one of a myriad of reasons. Okay, so let's go back and look at what happened on Friday. We had a fairly flat open. I was really anticipating more, maybe sideways to down. What I was hoping against was that we would see a real decline, because we're seeing a real improving technical picture. Things are becoming a little more clear each day that we're improving right now. And what has been so frustrating over the last month to 2 months is we look like we're getting ready to go off in one direction only to have things turn and go the other way. But yet we're still showing that we're in a trend at the same time, and that can be really frustrating. So the fact that we did see an advance on Friday is actually quite positive and is helping our overall technical picture. So we did have pretty much of a flat open. We were able to see follow through buying at the open that took us up to R1, and we kind of danced along that line. And it was really a pretty quiet day. It was kind of like Thursday. It looked like, okay, things are just going to settle down. We're going to fall back and regroup a little bit. But then as the day went on, we just kept going a little bit higher, a little bit higher. We got all the way up to R2. And that is pretty positive right now. And we ended up closing at the high, and we were up 1.17%. So if you go back to the low on Monday to the close on Friday, I have it here later on, how much, it's well over 7% move in just within this week. So, I mean, that is just amazing. The volume on Friday was far, way, way, way above average. And a lot of that has to do with quadruple witching. You have a lot of different options that are expiring, since this is the third Friday of the month. So it used to be triple witching, but then some additional types of option contracts were introduced a few years ago, and now it's quadruple witching, and that produces an awful lot of volume as we get closer to strike prices, as things, if you have options that you want to exercise, all of those things can contribute to volume being very heavy. We're still looking at the technicals like we always do, and we're seeing a much more improving situation. The oscillators that we have are still looking very good and going higher. We're starting to see some improvements now day by day with the moving average. We're getting close to the end of earnings season. Of course, inflation is what seems to be the main topic, at least within the US, and probably what you're dealing with on a day in and day out basis. And what goes hand in hand with that are interest rates. And then, of course, the geopolitical concerns with the whole Russia Ukraine situation. And that just keeps dragging on and on. As things happen, it comes more to the front of the news. Then, as it just kind of sustains itself, it may fall back a little bit. But there's some people that they're just hanging on to every video they can watch, every report they can hear about what's going on. So this can easily come to the forefront at any time, this whole Russia Ukraine thing. So what are some comments from Friday? We're out of correction territory. So we're just in a fallback situation right now from the all-time high. Now it's been a real mess to get to this point, but we are really seeing things improve right now. So the technicals are turning positive and getting stronger. On Thursday, we were able to regain the 200-day exponential moving average. Well, on Friday, we regained the 50-period moving average. And they changed it up a little bit. You'll see that it looks a little different, but we're still bouncing from an extreme fear reading on the CNN money index that we look at, and they've changed it to make it look different. Anyway, prices still remain in a range, and until we can break through, until we can get into some price levels where we don't see a lot of previous action at those same levels, we still continue to be in that range. The short-term double top that I thought could happen on Friday, it did not provide resistance. We just kept going right after that. And here's where it says we had a 7.24% climb since the low that was set back on last Monday, March 14th. That's a monster move within a week. We're still again looking at Russia, Ukraine, inflation, interest rates, and then China is always lurking in the background. What I'm focusing on with China right now is more of how that's going to influence the US economy because of the lockdowns. And some of you know that I teach English online to Chinese students. And so I'm talking to these folks every day. And I would say most of my students are home. They're doing online classes. They've shut down the schools again over there. And so I get more primary information about what's actually happening. And this could come through into the supply chain problems that we've already been having because we buy so many things from China. They're shutting things down. So what's that going to do? We did have existing home sales that came out on Friday, and they were weaker than expected. Not a real huge economic report, but still something to be aware of as we're seeing real estate kind of start to simmer off overall. The market valuation, I'm not really going to go through that again today. If you're interested in that, look at the video for Friday where I break down the overvalued, fair valued situation, because that doesn't change all that often. I'll probably also bring it up in the weekly video. And our trend still continues to be negative, but we're seeing a cross right now. It's starting to switch over positive. But as this adjusts, as the lines cross, and I'll show this on the chart, we need things to weaken a little bit if we're going to eventually then switch over to a positive trend based on the ADX. Our bias and momentum continue to be positive with these solid up days that we've been seeing. So let's go back, look at Friday's session, see what we can glean from that, and then see where things are looking forward into Monday. Here's where it looks a little bit different. And I don't know if it's better or worse, it's just different. So I'm not used to looking at this. We had been down below 20 in extreme fear territory. Well, with the advances that we're seeing lately, we're now back up into the 39 range where we are still showing fear, but a lot of that is subsiding. And you can see if you compare it to a week ago, we were at 18, where now we've climbed back up to 39. And then I kind of like the other chart a little bit better because they had the upper and lower areas, a more pronounced line. But we had dropped below 20, and then we are now bouncing up from that. The VIX continues to fall as prices go higher, both on a closing basis, and we're down below the moving average now on the bar chart and closed at the low, since the VIX closed at the low because prices closed at the high. The VIX of the VIX is also showing a decline in the overall reading. The Ulcer index continues to be sideways, and if we have many more up days, we will start to see this to decline. Then this was supposed to come out after Thursday's session, but it didn't. This is the Ridex ratio of bearish investors, people getting into bearish mutual funds, divided by those getting into bullish funds. And this is done earlier in the week. And it still is showing that most investors, and again, these people have a tendency to react instead of proact, they are still showing pretty excessive fear. Now, there's been a lot more other fear in the past that is more substantial, but if you go back over the couple of years, we are still seeing that spike in fear, which could be positive for the market. As far as our sectors, there were 9 out of 11 that were positive. Discretionary, a lot of the areas that have been getting hit, tech, communication, healthcare, blah, blah, blah. These were all higher. The 2 sectors that were down on Friday are those that had been performing well recently, energy and utilities. And then here's going back to the high, where energy is still in the lead, even though it has pulled back. And then discretionary, even though it's improving, continues to be in last place. As far as inflation, looking at the CRB, we saw a little bit of an advance, about 0.5%. So this still continues to go higher. What we're seeing, and I don't have a lot of charts, I'm not going to show gas and heating oil and wheat and aluminum in this video because we're seeing the same thing. We spiked up, that freaked everybody out, and we went up so far so fast that prices fell, people took profits, people started shorting, and then they came back down, and then they bounced a little bit on Thursday. Well, they bounced a little bit more on Friday, but we're not really seeing any excessive prices right now other than where they're at. I mean, other than overall, they are going much higher, but I'm talking about more price movement over the last couple of days. Technical alerts, we initially started out by crossing below 4,400, and we saw a bearish moving average crossover in the real estate sector. The NASDAQ dropped to 13.6, then it was able to get back to 13.7, then 13.8. Canada sets a new all-time high. They've been having some trouble, but they're bouncing back a lot like the US market is bouncing back. And let's see, the NYSE BPI. Now, those are all of the stocks on the New York Stock Exchange. The BPI that we look at is just on the S&P 500. So that's how they're a little bit different from each other. But having that cross, a broad market index like that, cross above 50 is positive. Then looking intraday, we've just kind of seen this steady overall uptrend now, going back to Wednesday. Well, we didn't have much. It was kind of a flat open, and we danced around A little bit higher, a little bit lower, a little bit higher, a little bit lower. Well, then we drifted higher and got up to R1, stopped there for a little bit, and then we're able to take things up to R2, and that's where we closed on the day. Looking at the bar chart, we seem to have broken above this short-term double top that I was pointing out. So I've taken that off of the chart. We're still in the range overall, and we have a lot that still needs to be done if we're going to break to the upside. Break up, that's kind of negative. But things are really showing some improvement right now. People are really scared, and the saying goes, the market climbs a wall of worry. And as people, or as prices were going a little bit higher, you would not believe the article saying, well, this is just a little bit of a bounce before we get ready to go lower, and the things are still pretty weak overall. And I'm not saying that that's not true, but when you start to see a lot of articles and a lot of statements, or if you listen to any podcast, if they're all kind of going in the same direction, that's about the time we want to look to go in the opposite direction. And just like with what I was pointing out on Friday, is I thought maybe we would decline a little bit or go sideways. No, we ended up going higher on Friday. And here you can see the huge spike. And if you go back at other times, you can see typically when we have these big volume spikes, those are different option expiration sessions. We're down 6.95% currently from the all-time high to the closing high. We're seeing a continuation of growth, showing some recovering where value is declining. And then I'm trying to stick a few more moving averages on some of these charts just to give us a little bit more perspective. Where when you compare growth with value, yeah, we're in a downtrend overall. The blue line is below the red line, but we're coming right back up to the 50-period moving average, which could act as resistance, or we might be able to break through, and that would make things look more positive. Here's the inverse of that same chart where we're coming down to the 50-period moving average with value overall. NASDAQ 100, and this red line is a 200-day moving average. It'd be nice if it went back a little further, but what we're most concerned with is where things look right now, where we are in a downtrend overall, but it does show some improvement. As far as our trend, this is what I'm talking about with the ADX. We are crossing. The red is going below and the green is starting to go above. As long as these lines stay close to each other, we're going to see the ADX trail off. If there's more of an advance and we really start to move and the green line really starts to get far away from the red line, then that's when we will see the ADX begin to reverse. So it just shows we're in a trend. We are above 20. In fact, we're above 30 as well. So there's still a trend. This does not measure direction. This just measures the strength of the trend. But if we drop back down here, then we may be in more of a sideways market. The Arun's not really helping us that much because it's still picking up that we are in price ranges where we've been before. We're seeing a continuation of selling pressure declining, and we were a little bit flat to lower with the buying power. Overall, we saw just a little bit of an uptick with the oscillator, but we're still below zero. And then this is the signal that seems to have been generated this time that is actually having an influence on the market. And you can see where we've come all the way back up to the 50-period moving average. As far as breadth, not a huge positive day, but enough to keep improving the technical picture. Based on price, we're headed higher. Based on volume, we're improving, but we're still below a declining moving average. Advanced decline ratio also showing some improvement. I thought maybe we were going to stall out right here. No, that's not what happened. So it's a much improving backdrop right now. New highs, new lows are starting to show some improvement as well, based on a trending basis, both a shorter term trend and then a longer term trend. It hasn't really turned up that much yet. Accumulation distribution. With the up day, we are above the moving average, and the moving average is now starting to turn up. Short term, we are above the 20 period moving average, and both of these moving averages are starting to turn up. Looking at our moving average study, we're starting to get extreme based on the 20 period moving average, showing improvement based on the 50 as well as the 200 period moving average. This is it, and it's a little hard because of all the different colors, but we were able to get back above the 20 EMA. Now we're starting to battle more of the 200 simple moving average, and we also have the 50 period moving average coming in here as well. So as messy as this looks, this does show some improvement, but also could be providing some overhead resistance. MACD continues to show improvement and is advancing. Short-term oscillator based on price and volume, also improving. McClellan oscillator, it was giving us an extreme reading after Thursday. It's even more extreme after Friday. But remember, an official overbought signal is not generated until the McClellan oscillator comes back down below this blue line right here. Stoke RSI is starting to be pegged positive, and the Williams percent R is also pegged positive. Force index also, we're getting up near the upper end of this moving average envelope, just showing that we've seen a really fast move to the upside. Rate of change going back 5 days is also showing that we've climbed pretty far, pretty fast. These are just things that could play into the scenario of a pullback starting on Monday without, as long as it doesn't get too far out of hand, it won't do a lot of technical damage to the market. Then here's our 50 period moving average. We closed right at the exponential moving average. We were able to break above the simple moving average on Friday, and that's pretty positive. A lot of people use the 50. Then I'm bringing this back just because we're right at the 100 period moving average. I don't show this chart all that much unless we are in severe sideways strategies that, and what I define as a sideways strategy is what is the ADX telling us. But since we came right up to the 100 period moving average, I wanted to show that chart here. The PMO is showing good, healthy advancing right now. PMO study, we rolled over just a little bit with those that are rising. We're showing strength on the buy signals and strength on those that are above zero. BPI also broke above 50. That's very positive. Saw another nice advance on Friday. If we see more upside action, we could start to get to an extreme positive reading. And here's just the longer term view of that same chart. We're starting to come back up into the rainbow, and the longer we can stay either in or break above the rainbow, the more possibility there is of these moving averages starting to turn back up. Stochastics also, short term, we're extended. Intermediate term, we're now extended, improving and advancing with the longer term stochastic measure. Summation index based on price is advancing, and based on volume is advancing. All of our oscillators continue to be positive, short, intermediate, and long term. Vortex, which crossed positive a few days ago, it's still positive, but not really picking up a lot of buying power at this point, but we are seeing a decrease in selling pressure. We want to see some follow through buying if we want to switch back to being positive. We want this green line to go higher and the red line to go lower. Oops, I missed one there. RSI above 50 and improving. I want to make sure I didn't miss. Yeah, okay. CCI 14, extreme positive. CCI 20, extreme positive. The Sean trend meter, we've really seen a pretty nice improvement, and we're still more in neutral territory. Where we get up into these other shaded areas is when it could turn more positive. And then I haven't shown this in a while, but this is just the standard deviation. We have an average price, and how far are we deviating away from that? And that is starting to spike up a little bit. It's been at this level before, and then we turned and went in the opposite direction, but it also could spike higher at the same time. The Chaikin oscillator starting to get into extreme positive territory. Chaikin money flow is showing much improvement. The percent B based on the Bollinger Bands, this is where I use this as an overbought, oversold indicator. We've climbed pretty fast. We were down here at the lower end of the Bollinger Band. I pointed this out when we crossed above the midpoint. Well, now we're getting towards the upward part of that. And then down here, this works more like an oscillator. Different trading systems. Elder is positive with a green bar. SAR finally switched over positive after Wednesday and continues to be positive. Our Heiken Ashi is showing much improvement with these clear bars. Kegi advanced a little bit, showing a little bit more positive action. Renko is redrawing itself to show things that are a little bit more positive. 3-line break also showing that things are more positive. Equi-volume, we were able to break above this resistance level, but we still have other areas where we've been before. We do have a signal. This could be a potential double top breakout. We had another green X draw on the point and figure chart. That's positive. If price continues to go up, we want these X's to go up as well. And that is the potential positive signal that the point and figure chart is picking up. We're starting to go above the 38.2 as far as the fib retracement that we've been following. Long term, we're just a little bit below. We are 7 points below the 200-day moving average. We closed at 44.63. The moving average is at 44.70. So if we want to get the longer term trend to keep improving, we've got to get above 44.70. Now these readjust every day, but that's how it would look right now. And here's the logarithmic chart. Then our mega caps still showing some improvement, but have a lot of work to do to turn back positive. The KS, why do I call it the KSD? Special K, just like the breakfast, turning up ever so slightly, not as easy to see in the longer term chart. We're seeing much improvement with our moving average longer term study that we do. We're breaking above with the 50. We're breaking above with the 150 and breaking above with the 200. Some broad market things to look at. Here's the S&P. We're still range bound, but this is looking more friendly at the current time, unless we really start to fall back. Mid caps also not really breaking out as much, but showing a lot of improvement. The small caps, which again, we're kind of running that scenario out, they are breaking out of this mess that we were in for quite a while. We still have more mess that we need to clear, but this looks a little bit more positive right now. FANG stocks were up 3.37%. We're starting to come up to the moving average, and we're going to need to see that come up higher if things are to improve. ARC also had a 4.5% gain, but has a long way to go to switch back positive. The Dow, we closed above the pivot on Thursday. We were able to regain the 50-period moving average on Friday. Small caps, breaking out of these series of tops right now. We regained the 50, but now we're coming up to the 200-day moving average. Mid caps, kind of the same thing. not really so much of a breakout, but we're coming up to the 200-day moving average. And at NASDAQ, we're coming up to the 200-day moving average now after being able to get above the pivot. So this could act as resistance, or this could just show a much improving environment. NASDAQ 100, same thing, coming right up to the, did I say 200? I meant 50 right here with this moving average. We're coming up to the 50 on the NASDAQ 100 as well. The VIXN, with prices advancing, we are seeing a decline in overall fear. NYSE, this is the broader base, and we are breaking above the 50-period moving average, but we still have the 200 above us, but we are above the pivot. And then looking at the S&P 100, we saw more strength from the big stocks on Friday. It outperformed the rest of the S&P, which also performed well. Then Wilshire, which we still have this erroneous mess on here, but we were able to get above the 50-period moving average and stay above the pivot. So China is trying to bounce. They've been bouncing a little bit, but they've got a ways to go before they improve. A lot of these other international markets are showing signs of improvement, but the US market continues to be leading in turning back positive. Our all stocks were coming up to the 50-period moving average. Other things that we look at, here's an intermarket analysis chart where we just shot to the moon with oil, have been dropping back. We're still up almost 85%, at least going back a year right here, but it's well off of the highs. The black line is the S&P, where we're showing some improvement. Gold, which had been breaking out, is now showing some weakness. Bonds kind of continue to not do very well. And the dollar, which had a little bit of weakness, bounced back slightly. Here is the dollar chart. We bounced a little bit, and this is the daily chart, and we are still in an overall uptrend. We've now finished a weekly chart, which is also showing an uptrend. Here's oil. We spiked up, came down, dropped below 100. Well, we closed above 100. We're at 103.09. Gold, very similar, bounced up, came down, and even saw almost 0.75% of a decline on Friday. Silver, I'm sorry, we're not there yet. Gold, here's the ETF. Just had a bit of a down day. Here's the longer term gold ETF chart. Here's silver, where it was down 1.33% on Friday. And here's the longer term view of that same chart. Bitcoin, which is trying to stay above 40 right now. We'll see how the weekend goes if things end up happening there. We're still watching a decline with our yield curve, comparing our 10-year yield with the 2-year yield. Then looking at the 30. Once we get away from these lines, I'll take this chart off because I focus more on the 10, but we were right below this 50% retracement with the 30-year yield. We also bounced lower at the 61.8% retracement on the 10-year yield. We saw a decline, and the 2 and the 5 continue to go back and forth with each other. They're both at 2.14% right now. They're giving you the same return, whether you want to tie your money up for 5 years or 10 years. But we're seeing an increase in the 2-year right now, and a little bit of an increase in the 3-month. Looking internationally, we are seeing an overall advance. This chart here is a daily chart, and then this chart is a weekly chart. So that's where you can see things a little bit different. We bounced, we're pretty much unchanged based on price. So, and we're starting to get down here to what could be some potential support. The corporate bonds are showing some improvement, but still have a ways to go based on price. if they're going to turn back positive. Here's the latest yield that I can find. We're at 3.47%. And here is the longer term view of that chart. Junk bonds were able to recoup about 1/3% on Friday. Looking at our relative studies with the advance in the S&P and the decline in gold, we're coming back down to this moving average now. So we want to keep an eye on that. The energy versus the S&P also showing a bit of a decline, but a really strong uptrend overall. Looking at growth against bonds, growth has been able to break above this moving average. So that could be positive. And then looking at the tech sector against the S&P, still has a ways to go. It was up almost 1% on Friday, but we want to see things get back above this moving average for it to look better. Then looking at tech against the 10-year yield, where tech bounced a bit on Friday as yields came down, but we're still in an overall downtrend. Then looking at the yield against tech, trying to just the flip-flop, where it's just showing that interest rates have been rising stronger than the tech sector has been. And then discretionary against staples showing some improvement. We're that is not even a word. We were able to regain the 50-period moving average, but we are still in an overall negative trend. Then looking at the S&P against the 10-year yield, because interest rates have been falling and the S&P has been climbing, we're seeing this rebound a bit, but we are still in an overall downtrend. This scenario still seems to be legitimate. We saw a bottom in small caps and they started to bounce. And now after that, we are starting to see the strength that we've been seeing lately in the S&P. So what are we looking for on Monday? We're out of correction territory. And a lot of these, my gosh, if you watch these every day, it's like I could just record this once and then just splice it in here. We continue to be in an intermediate term range. We're coming up to the end of earnings season. We're battling between growth and value. On Monday, there's really no economic reports coming out. We want to keep an eye on what's going on between Russia and Ukraine, and then the different potential economic and even geopolitical things going on in China. Here's our scenarios. Might we revert back to the previous trend before the Fed raised rates and we've seen this positive bounce? As we see more and more strength, that looks less and less likely, but we still don't want to take that off the table yet. Are we forming a possible base? Right now, it looks like we're coming up out of that base. Our oscillators are positive. We regained the 50 and 200-day moving averages, but we need to see follow through. And then the other scenario, did we see a short-term double top? No, not from Thursday to Friday, but we are still overbought in the short term and dealing with overhead resistance. So our conclusion is that the S&P is turning positive, yet remains in a range. Short and intermediate term bias is positive to mixed, with our oscillators being positive, and we are improving a great deal with the moving averages, but we have a ways to go. And the long-term bias remains getting more negative because we're still 7 points below the 200-day moving average, and then the different scenarios that I just got finished pointing out. So thank you. Have a wonderful weekend. I plan on preparing and posting a weekly video. I hope my voice holds up long enough for that. So I hope you do have a great weekend. And if you don't listen to the weekly video, I will prepare another daily video after Monday's session, and I will talk to you at that time.